Hey, what's going on, guys? It's your boy MC Fire.
And Ice Cube.
Hey, we're coming with our picks for the week, for the month, kind of thing. We are basically just looking to um, basically give you guys a basic breakdown of what we're looking at for potential assets, going over some of the REITs that we're looking to buy immediately, and tell you guys what we're looking for moving forward. So, we're gonna dive right in. Q's actually said she's gonna stay with me on this one, so awesome. She gets to partake. So we have a couple picks for you guys today. Three buys, one sell, and we're gonna go over why we think those are a good look and what the reason is behind that. So we've looked through a couple, and I guess the first one that we'll go over is our first REIT, which is BXP. Boom. So Q, what can you tell us off the bat? Like, what do you see? What do you think?
Why are you bringing me into that? This is your level of expertise,
Hey,
mister.
I want to just the cool thing about them seeing your perspective is somebody that doesn't understand what they're looking at, what goes through their mind. Automatically, you can already tell she's like, don't bring me into this. This is not my expertise. And that's what most people say when they look at the market or the charts. They don't even know what they're looking at, right? Now, I would say to most people, it's really simple. You're looking for bottom left, top right, but you want to get things at a discount. But they say buy low, sell high. So that's kind of the crux of the whole matter. You want to buy when things are low, right? But you want them to be bottom left, top right. The very first thing that I notice here is that it's got a lot of red right here. Just use that as a basic indication that the trend overall is down. It's just a way that I help identify the trend. This right here is kind of your unbalanced volume. And all that means is price and the volume above average or below average. So if it's red, price and volume is below average. Not a lot of people are buying and it's below its average price. Then you'll see selling, right?
Right.
Or accelerated selling. Okay. So what you kind of want is you want to uptrend with price and volume above average, right? This indicator down here, we'd explain that later, but basically it helps you identify short-term and long-term trends. Okay, but what I see automatically is in this rate, BXP, it's already starting to go in a slight uptrend. So here we have this the price action, and I put an alert right here. If price action crosses below or above, the previous week's high, and it's above the 8 period moving average, then we're good to go. 8 period moving average is if I take the last 8 weeks and I average what its price is, it'll give you this line, and that's identified by that indicator right there, right? The cloud saying the first moving average is 8, the second moving average is 20, and if the 8 moving average is above the 20 moving average, it'll output a green, right? If the 8 period moving average is below the 20 moving average, it'll output a red. So it's saying, hey, 8 is below 20, therefore it's red. This one is saying 8 is below 20, therefore it's green, right? Make sense? Cool. So it just kind of gives you a brief, kind of quick snapshot look at, hey, is it trending up, trending down? What's the overall immediate look, right? We notice right here that it's been red for a long period of time. And then you get an expansion of green here, followed by a slight pullback of red. Now, these reds are higher than these reds. So we call that a higher low. This is the high of that move. This is the low. This is the low of that move. This is the high of this move. So if it's making higher lows and potentially higher highs, we can classify that as an uptrend. Might be a weaker uptrend, but it is in an uptrend. So as we look to profit off a potential upswing, we're going to say, hey, this is a weekly chart, and if it crosses above this period moving average, above the 8, and it's above previous week's high, we want to take a buy, right? This will be like a longer term hold. So even if we buy it, it doesn't necessarily work out. We like the REITs because they're going to give us dividends in the long run. Okay, so that's the first one we're checking out. The next REIT that we want to take a look at is O. O is kind of in the same boat. It previously rallied a little bit, but as this kind of breaks its 8-period moving average high, and this breaks this previous week's high, then looking to buy this, if it continues and goes green, is what we want to do. Now, the unbalanced volume down here is red, but that's okay. Again, that's a longer buy. We're looking to put more REITs into our portfolio. So there's other ones out there, but if we can catch its changing of its trend, I think this is a good area to really look at it.
Okay.
What do you think so far?
Yeah. It sounds simple enough. Red and green, up and down.
Red and green, up and down. Love it, right? What's next? So we've got another, this one isn't necessarily a REIT, but we like to incorporate options into our strategy to kind of build income for REITs, and we take advantage of certain opportunities in the market. This is a more advantageous buy. Okay, so I zoomed in just a little bit, but if you notice that the unbalanced volume down here is green, so that means price and volume is above average. In a very defined uptrend, it pulled back a little bit. So it's almost like a good basketball player getting injured, and you're looking to catch him on the way of his recovery. If it recovers and it breaks above this week's high, which is this week closed, so it breaks above this week's high, and it would be above the 8-period moving average with volume and price above average, then we'll look to take a buy, maybe for the next 3 weeks. And if things continue strong, we'll roll the contract. For those of you who don't know what rolling the contract is, it basically means options work like you have the right but not the obligation to buy or sell a certain item at a agreed upon price in a future period in time. So that might sound very confusing, but all it basically says is I control the rights to buy or sell something for this length that we agree upon. So in this case, I could say my contract gives us, me and Q, the right to buy Shopify at a certain price. That's called the strike price for a certain period of time. That period of time is typically determined by, we like to do it 3 weeks to a month out. So if we look at that, just for educational purposes, we could say, okay, Shopify, 3 weeks out, it gives you the amount, 21 days, that's about 3 weeks. Shopify to buy a call option, it would be around $275 to do that, right? And you'll hold the right but not the obligation to buy 100 shares of Shopify at this strike price. The strike price, $78. So if it goes above $78, we will be in the money and will be profitable. That's all you really have to worry about on that one. If it goes up above $78, we can capitalize on that movement and it can make us potentially some money, right? What would your target necessarily be? Let's say you bought more than a few shares or a few contracts, right? I'd be looking to skim off some right here and look to roll at this level and then significantly reduce our position at this level. Why these 3 levels? Because this is the first period of resistance, the first sign of trouble. So if, let's say you sell half your position there, you're profitable, but you leave a few runners to continue on. The next sign of trouble is here, where you could roll it or reduce your position, taking some money off the table if you roll. And then if it goes up here, reducing it even more. Probably your original size would be down by 80%. So you basically keeping like one contract, maybe a runner on that one, right? Just to see, hey, if potentially goes, I'm already in the play. Why cut my my winners short? So those are your 3 buys. BXP, O for buy and hold strategic, and then for the options play, Shopify. The sell play that we are looking at is a Forex play. It is the Canadian dollar.
Canadian dollar.
The Canadian dollar. Yep. So we'll zoom out here. But basically, the Canadian dollar has been kind of stuck in this range here. Unbalanced volume is red and is kind of going in a downtrend. So if it breaks this low, we want to get in, if it breaks the low, for it to continue to the downside. So the way we do that is we right click on that level. We'd say mark at or below, right? Boom, there it is. And so if it kicks below that, we'll know. And we're looking for it to at least just go down to this level. We wouldn't necessarily get an option contract by itself. We'll probably get a debit spread. If you don't know what that is, it's basically a poor man's version of an options contract. And the cool thing about options that I absolutely love, and Q's finding out, is that you can do just about anything you want with options and set it up the way you need to be able to profit. And I'd like to illustrate that. Something that we're learning. Let's take, for example, we're going to go to SPY. Okay. So let's say, for example, you see SPY is really high. Now, anyone that has a third grade education understands you buy low and sell high. But if you think that SPY will continue to go up, is there a way you can profit all that without putting too much on the table? Let's say from a daily or even a weekly perspective. I'm about to show you how to do that. So let's say, for example, we're looking at SPY, right? And we see SPY is a contract that expires, let's say in three days. It says 3 days right here. So what we'll do is we'll come here, we'll scroll down to, let's just say for the sake of example, this. We'll right click, we'll buy. What we're buying is going to be a butterfly. It's a more of an advanced option strategy, but if you understand what you're doing, it's possible. Now, it only gives you the option to buy a strangle on this. So we'll see if we can find a butterfly real quick. So bear with me. We're going to buy a butterfly. Maybe XSP will do it. There we go. Let's see. I've done it several times on this one. We'll close that out. Thank you. Close that out. Thank you. This is on the negative. So we want to get a contract. This is for April 1st. Let's go right here. This might work. Might work, might not. We'll see. Boom. Okay. So we'll be buying a call butterfly if it'll allow us to. Cool. Yep. There. Boom. Cannon. Okay. So let me explain to you what we just did. We are setting up to buy a butterfly. It's an advanced option strategy that allows you to put a little money on the table, but have the potential to get 5, sometimes 10x returns. And that is really, really good because that's the option. That's really what you want to do with trading. Put a lot of money in, get a lot of money out. And if you can reduce your risk by putting a very small percentage of your money in, and then get a overwhelming return, that's very, very powerful. As you can see here, the price to execute the option is 60 cents. Because there's 100 shares for every options contract, you move the decimal over to 2 places, that's $60. So if we're analyzing this, we're going to analyze this trade and see potentially what's the risk to reward. What this is showing you, this is called it's basically a profit chart. So you can see how much you stand to lose versus how much you stand to gain if at expiration this price is where you want it. And I'll explain what that means. So here we're risking roughly $60 to gain potentially, not guaranteed, but potentially $325 roughly. $325. So you're saying, well, wait a minute. That seems amazing, because that's what we were pretty much saying. If you can risk $60 to get $300, most people would take that deal. Now, this is a little bit more advanced. There's a lot more to it, but if everything worked out perfectly, this could happen in your trade. And that's what we're looking to capitalize on with our new strategy that we're learning. Mm-hmm. So you guys stay tuned for that. As we become more experts at doing and explaining that will come kind of down the pipe, and we'll show you what that's really all about and how we've been doing good, bad, what are the lessons, but we're going to learn the art of the butterfly, as I like to call it. And if you like investing $60 to potentially make $300, then you came to the right place, man. So Do you have any questions before we break?
No.
This seemed pretty confusing.
That's your stuff.
She's like, this is all you. You got
All
it.
you.
I would definitely encourage everyone that getting immersed in the world of trading or assets in some capacity is good. So hats off to Q for joining me on this one. But yeah, this is going to be some sweet stuff that we're going to be breaking out. So if you like this, we might run like an offshoot channel for those who like options or investing in.
Or even just have a separate, like we'll upload videos on this channel for like options and stuff like that.
Yeah.
Just put it in a separate playlist.
Like separate playlist kind of thing.
Yeah.
Yeah. So this is good stuff. But I appreciate you guys joining me and Q on this one. This is your boy MC Fire.
And Ice Cube.
You guys have a wonderful day. Have a good day and goodbye.
Shalom.
Peace.